Good evening, everyone. This video is going to be a trading review and support session for September the 21st, 2022. We're not quite to February yet. I'm not sure why I want to be in February. It's cold in February. All right, so today was FOMC day. And as usual, FOMC days are a little bit tough. I end up chasing too much on FOMC days. Ended up okay after I traded a little bit after the FOMC announcement. So let's just review what the day looks like. So this is the result after the FOMC announcement. It did go back and forth, but ended up down. Not a surprise. Also not a surprise was, the FOMC overnight rate adjustment. It was 75 basis points, just kind of like in the predominant opinions of what the Fed's going to do. The only thing that maybe was a little bit different was the kind of the language, and that's what everybody always listens to. The language that was being used on how much further they're going to go. So in general, they kind of gave the opinion that they're really going to probably raise rates a little bit more over the course of maybe like the next year than they were previously letting on. They kind of used the words that they're willing to risk a recession, right, to fight inflation, and that's the sort of things that kind of sets the market reeling. So, and reeling it did, even though it did pop up for a bit. So let's just review that real quick since we're reviewing FOMC day results. Take a look at the big picture chart to see what's going on, and let's see if I can get all this, because this is what we were dealing with. So here's about the market open, and then there is about 11. So really so market open is about here, 11 o'clock is about there, right? Let's make sure I got that about right. Yeah, well, maybe it was a little bit later than that. Maybe it's about there. So I mean, the market was up around R1 when the announcement made, and then the announcement hit, and this was 6:30 to 11. This is this whole area here is 5 minutes. This hours from here to here, 5 minutes. So pretty crazy. That's what FOMC days do. So that's why it's difficult to trade. And it actually kind of bottomed out for a little while, right, around yesterday's low, as you can see, right, even came back up and made a new high, and then that's not really going to last, and then attempts, right, to get back up there, shorter attempt, back down, finished extremely weak, and it's still weak. So that's kind of what the environment is going to be. Tomorrow should be interesting, as if today wasn't interesting. But let's go through the trading. Started out okay. So didn't want to trade too early. Took a short trade here, and that worked just fine. Also didn't want to trade too terribly much, so I was watching the market. Then I made a mistake. It kind of looked like the market wanted to go back down, and it did go back down. But the mistake I made was it was kind of running away from the fast zone, but the fast flex was still increasing. I mean, and it doesn't really matter that it was under it that much, but fast flex was still increasing, and the latest movement of the EMA was also up, right? And it hadn't really gone down yet. So it was kind of mixed in here. So but I do kind of consider this, kind of a reactionary kind of a trade. And sure enough, it was going up. And then something interesting happened, right? So I was trying to, and this is a pretty big up candle. So I was trying to close, right, before, I think this is what I think happened. It was kind of a bang bang kind of a scenario. I was trying to close and I hit close, trying to get a shorter stop. But instead, I think it kind of happened simultaneously. Either that or I did hit reverse, one of the two. So, hitting close and then it hits the stop. So hitting close sends the orders to get out. If it hits the stop and it is out, and it's just going to get you long. So I had a three point stop out, but then I reversed. And so so I was long and I just played it out for the long, right? And got out. Actually, I didn't get out here. I got out over here, right, to the long side. So so that at least gave me a little bit lower of a loss. So I was still at 4 and 5 ticks, so a little bit more than a point here, a little 3 points there. Let's see, where did I? Oh, 3 points here, and then another kind of a point on that. So I'm down a little bit. So trade here, right? That one is okay. So I'm still down about a point. And then a trade here. I trade here. Oh, I traded somewhere else. Thought I had a trade in here. Let me go back and look at my chart. I did. Maybe I lost. I lost the arrow somewhere, but I traded. This one is accurate, but I also went short, kind of on a 52.05. Why am I not seeing the arrow? 52.05. Oh, there it is, right there. Okay, I just can't see it. Sometimes these things. So it went short here, right? So that's the arrow. Let me put some yellow on it, right? And got out here, right? So survived that trade. It looked like it was going to push some more, right? So flexes are aligned, but it's kind of hanging around the EMA. And this is one of those that gave me it's kind of disappointing. So ultimately, I was right in the direction, right, and it gave me an exact 3 point stop out right there, right. I mean, I was the last guy out, right, in that scenario. And then of course it comes straight back down, right? So that was a little upsetting. So so that was the second stop out. And then I chase this one a little bit more, and that's a stop out. So I am down some now, but I do kind of come back some, right? Still at a loss before the end of the day, but now this FOMC day is sort of grinding on me. Let's see. I take another couple of trades. Okay, take a trade here, right? And that wasn't the only trade. I think I traded at least one more. Oh, and I traded. This was a very fast reaction. I mean, look at this. So it's shoot up, but can't go any higher. Then starts to shoot down. So I'll take another trade there, and trying to narrow my losses a little bit on an FOMC day. This is just really slow grinding down, but and then that popped pretty good down here. So take the last trade of the morning here, and that one works. So I'm actually still down. I'm still down 4 points for the morning, and I didn't really like the action, going forward. So I ended up waiting. Didn't watch it at all. In fact, I wasn't even at home. I had some appointments out, but I did trade after the FOMC announcement. Pretty violent reaction, so I was able to get enough trades and enough profit points on the volatility that I went from a -4 to about a +3 or so for the day. So FOMC day didn't. I mean, just the mornings on FOMC kind of bad. But anyway, so what I wanted to also go through though is on these non-trending kind of a day is letting the markets get to an extreme and then watch it, right? Let me go back to that's 7. Let me go back a little bit more. Okay, so here it is at an extreme, right? Go to extreme, and it's not really, there's really no trend in the market right now, but it is kind of a big move. Pay attention to both the flexes, right? And the market comes down. Let it get to an extreme. Now nothing is very well lined up here, right? And this is an interesting area, but I didn't trust it. But it is coming from a double bottom attempt, and it pops over the flexes very nicely. So if the market isn't a trendy day, that is something to look for. But if it's trending, all right. So here's another example. Gets to kind of gets into the more conservative EMA band, right? And the flexes are close to each other and then pops down. Right now here is, the flexes are too wide, right? But then it continues, right, going through there. Let's see what happens when we get to another kind of an extreme, right? So here is a typical pattern, right? Sets a high. Here's the double top, and it can't get back to it. So ultimately, fast flex starts to roll over, right? And then this is an area, right? I was just too fast. I was just too quick. So I went here, waiting, and I can't seem to wait either. So this would be potential, but you got to be faster, right? But waiting until it gets up into the fast flex, right? And everything's pointing down, and then with an expansion, even though it's a little bit, it's slightly counter trend. I mean, it's already giving you the signals that, hey, I can't seem to get back up here, right? So the market's rolling over some. So in that case, right, it's really, and it hit it pretty hard right here. Here's the expansion, right? So that is overall, if you wait for that, and generally the same is true on the upside as well, right? Then that is a good signal. This one was a little bit of this one was too close to the news. Shame on me. Again, can't get up too much, right? And then the fluxes are right on top of each other, right? Ultra and fast are right on top of each other. It's got some expansions going on. There's the expansion that's really kind of breaking the markets back, right? And even those the EMA is stepping down. So in conditions like this, I'm thinking about, because sometimes I wait too long, right? In this case, I was already mad, so I didn't trade it at all. Sometimes these things prevent me from taking the trade, but these are really good reasons to take the trade. Sometimes I wonder if I got too much stuff on my chart. But we'll talk a little bit about that tomorrow. Well, let me talk about it now. I used to have 3 flexes on the chart, right? Ultra flex, and then a little bit slower one, and then this one, right? So I've eliminated one, right? Eliminated the speed that was between these two. This one is 34, right? The other one used to be 50, and this one is 100, right? So I've actually only going to keep, and I've changed it on my chart as well. I'm only going to keep the 34 and the 100. It takes one line off of the chart. I was actually working on something else as well, but it was going to add yet another line on the chart. I don't need any more lines on the chart, I don't think. So just going with these two, and I can still continue to evaluate if there's something else I can eliminate. At some point or another, they're all kind of important, right? So let's see what happens here. Let's see, it's a little after 7. Market kind of starts to slow down here a little bit. So some of it's kind of working. It tried to get, again, here's the top, here's the top. Can't get back up there, right? And then here's some movement down, right? And tries to get again here. So here's the top, and here's the top, right? Can't really get any further up, right? And then back down it comes. Here's the expansion, right? So I don't even remember. I mean, this is enough to get out, but let's see where it went to. Yep, that's about all it did, but it was at least enough to get out. Let me clean that up. And this is FOMC day. It really isn't really doing anything at all at this point. So this one was kind of a continuation. This one was kind of a continuation. But then again, this was that, it's a momentary double top, right? So we have a top here, a new top, but then a big rejection bar, right? And then continuation. So I didn't want to do it into R1, right? But it was a good trade coming back down, and it's just kind of like a spike up, right? Size of the bars matter in terms of what the market is thinking, and then it really then it becomes less interesting, right? So just want to kind of show you those kind of things, but look for double tops, look for double bottoms, and then see where the expansions come into play. So that's kind of about all I had for this evening, and again, still working on, maybe there's something else I can get rid of. Don't know yet. All right, any questions on that at all? Let's see, 655. The one that I don't know. So I sometimes I think that, and it has been suggested maybe the stop should be 4 points. 3.5 points, something like that, because this 3-point thing has gotten me multiple times, right? So now how many times has it gotten me versus each time it gets me, the difference would be at least 4 points, right? I mean, there's the stop, and then you miss the profit as well. So should you extend it? The other scenario, maybe in combination, if we extend the stop a little bit, should we go for a little bit more profit? Because if you're taking good trades, 4 ticks, 5 ticks, even 6 ticks are actually pretty easy to come by, right? If you're taking the good trades and you're being patient. My problem is I'm not that patient. So if you choose to increase the stop, better increase the profit target as well. You want to try to keep a reasonable risk to reward scenario. I'm definitely thinking about. We'll see. Well, we'll see what the for just for that one trade. Maybe, it's difficult to say. I mean, so sometimes it does. Let's talk about this area, just this one, right? Just this one, because it is at some areas that it might try to support, right? It's at the EMA and the 3-minute close, but like you said, it has broken down here, right? And the S&P 500 does bounce, right? We just want to make sure we get there. So it hasn't done anything wrong to the short side, right? So in that sense, so I don't know. This is 1, 2. It's about 3 ticks over the the fast flex. So I don't know. Maybe 6 ticks over fast flex. And then when it comes back down, right, when it starts to come back down, you could probably, pull the stop down some, right, because fast flex is continuing, and you don't want it to let it pop too far over fast flex. So even let's the exit would have been like down in here, right? So even if if you just moved it momentarily, right, you could have moved the stop down with fast flex. So it's not a bad idea, right? So you just have to do it, and then you'd be out here. So I have done that before, right? To give it a little bit more room, and then if it continues to come down, even in this case fast flex, even if I'm not out, I'll bring the stop down, because it might be a scenario like this. Fast flex is coming down. Don't want to leave the stop in this, let's say just in this case, way up here, right? Let's say the price action is here, way up here. That would be, look at the difference in the space between fast flex and your potential stop. You don't want that much. So yes, I think that's a good idea. I have done it before. I obviously didn't do it in this case. This was a little bit of an aggressive entry anyway. I mean, it was kind of coming back up to the Globex high and then moving back down. I thought it could go, but it didn't. But you want to keep, the overall picture. Yeah, I mean, I just separated my contracts, right? I just separated my units between 4 and 5 ticks. And tomorrow I just may go for 5 combined tomorrow, and it depends on what the market action looks like tomorrow. Tomorrow might be okay. It'll be some, and there should be some volatility in the market, because it's the day after FOMC day. They kind of shook the market up. So tomorrow may actually be, depending on what the volume is, a day to go for a little bit more profit. We'll check out the market in the morning to see what we're going to do. Come in tomorrow morning and we'll get a read on what's going on. Vaccine, your second shingles vaccine. I've had shingles before, and it was no fun. It's been years and years and years, but I've never taken the vaccine. Is that something you do occasionally? Or it's your second time? Okay, second time in your life. Okay. All right. Well, good luck with that. We'll keep the market working until you get back. All right. Anything else? All right. Have a good evening and good luck in the morning. And we will see you soon. You too.